So is the bull market over or just getting started? Let's jump in, take a look at the news, take a look at the charts. We also have Blackrock coming out with an ETF application, Bitcoin spot ETF trust application, which is a little nuanced, but at the end of the day, they buy spot Bitcoin and it's instantly liquid for the investors. They're also making their bet on Coinbase as the custodian, and Binance continues to be under fire as France files a criminal investigation. So lots of big things going on in the crypto space this week. Markets are down a little bit today. Dow down 0.32, S&P down 0.37, NASDAQ down 0.68. So is this a reversal, a topping tail? The markets have been on a tear since October and reaching critical levels that generally indicate that in the past, when we've seen these types of things, a reversal in the market. So we're going to take a look at the charts and see if this is a reversal, the beginning of the reversal, or if this is going to be new all-time highs coming into the next couple of weeks. And where do we go from there? So let's jump in and just take a look at what's going on. Again, the big things this week are, the whole situation with, Binance and the SEC suing Binance. And we have Blackrock coming out with its ETF. Cryptocurrency markets are up on that as they digest that news. Bitcoin is up today to 26.4. We'll take a look at the Bitcoin chart in just a minute. And then again, using Coinbase as the custodian for the spot Bitcoin that they're going to buy. So giving a boost to Coinbase in terms of confidence. The question is, will the SEC approve this? And how is this going to affect the situation with Coinbase and Binance lawsuits? And we can talk about that a little bit towards the end. Let's jump in and take a look at the charts. And picking up on the last video, the markets haven't really done a whole lot, just been kind of ranging here. But the Dow Jones rejecting right at the 702. And as we know, Fibonacci retracement levels, or you may or may not know, are very important technical levels in the markets. The Dow has rejected on the 702 earlier back in December and went on to set a higher low, and then ultimately almost getting back to that level, but wrestling with the 618, broke through it. So this is typically the area with a bear market rally where you can see a big rejection and roll over and put new lows in. So all eyes will be on this next week as this major technical level has rejected the recent rally in the Dow. The NASDAQ has reached out almost to the 786, which is your next level to get through. Generally, if price can get through the 702, 786 and confirm and move on, then you can be looking for, the new all-time highs to be reached. But again, losing steam just above the 702 before getting to the 786. S&P losing at the 702. So these are very important technical levels, psychological levels for market participants. And we marked out in the past what's happened with some of these levels before that we've seen in previous cycles. If you go back to 2009 on the NASDAQ, you can see where price wrestled with that, broke through that 702 and ultimately made it back to the 786 before rolling over longer term on that initial peak to trough. Then once again, double rejected right at the 618, 702 level. Kind of what we're seeing right now in the Dow, this losing this, level 2 times. We saw that just recently on the Dow. S&P, let's see if we've got S&P marked out in previous cycles here from 2009. So here's the same thing on the S&P in 2009, where from peak to trough of the initial low that was put in, the market did retrace back up to that 618 level before ultimately rolling over and going down for, the bottom in March of 09. Kind of similar to what's going on now, kind of put in a couple of double tops here, had some nice big rallies along the way, consolidated for some time. That was probably after the drop there, consolidating for about 82 days, had a drop, rose back up for, a total of about 154 days before finally rolling over. I think we've had a little bit more consolidation in this current market cycle, but these are typically the types of things that, that kind of happen. So let's go from this this initial October low to where we are now. It's only been 174 days. So right in the same time frames in terms of a consolidation. This is the S&P, had a nice little spike here over the last couple of weeks. Same thing with the NASDAQ. The Dow's been, had a nice little pump here, but more kind of hanging out. And a lot of times, what'll happen is this is how these things can start, right? You're down 1% or 2%, and no big deal. Next thing you know, you're down 5%, and that's a buy the dip opportunity and just a correction. And then next thing you know, you're down 10%, and then same thing because of where we came from in the QE low interest rate environment. Another buy the dip opportunity. Just a healthy correction. Then next thing you know, you're down 15%. The next thing you know, you're down at the previous lows. That's kind of how these bear market rallies can work out in a big cycle. If you look at, back in 2009, this was a buy the dip opportunity, had a nice little rally, correction, buy the dip, correction, buy the dip. That was the thinking over and over before finally rolling over. Even to this point, again, you heard a lot of the buy the dip stuff, but then you started having bank failures and things like that in 2009. Let's go back in the NASDAQ and look at the .com bubble. Little closer setup. This looks more closer to what Bitcoin looks like. This looks like the psychology of the market chart almost to a T, where this is the complacency stage here, where markets roll over. They get these big snapbacks, kind of bounce around. You have these buy the dip opportunities. Has a double top, right, double peak right at the 618 before ultimately rolling over, and had, several healthy bounces all the way along, all the way to the bottom. And every time people were talking about buying the dip, a lot of times that's what happens. But this really looks a lot like the psychology, the market chart. And let's take a look at how this compares to the Bitcoin chart right now. Not exactly, what it looks like right now, but arguably you could say this was that complacency period where everybody thought it was bull market on again. Do Kwon was buying, Michael Saylor was buying, everything was going great. And then you had everything just kind of collapse from there. FTX, everything collapsed from there. Now we're getting back. And then we're in this falling channel, this falling flag pennant, kind of a pattern right now where price can kind of continue to move along this direction for quite some time before you get any kind of resolution. It did break below and reject briefly after the Binance Coinbase news, but has now broken back above, largely on the news of the Blackrock ETF. And potentially once that hype fades, it'll come back down, test lower levels, and it could just bounce around in this range for quite a while. And if you look at this on the weekly, right now, price is still below the 200-week moving average. Really need to reclaim, Bitcoin needs to reclaim that 200-week moving average for any kind of bullish, continuation to be expected. It lost the 200-week moving average the last time we saw price wrestle and lose it, went down to a lower low there. Generally, that is your major support level, but it's been resistance in this bear trend here. So interesting price action on Bitcoin. And again, these are also the levels on the markets where if price can continue on and get above the 786 and, put in, maybe reject here a little bit, get above, put in support, and then go on from there, then you can start to really talk about, a new bull market at that point, once it gets past these levels. But right now you have to respect the rally and maybe take some profits. And a lot of times that's what happens at these levels like this, right? This 702, 786, these are good technical profit-taking levels with the algorithms, if this, then that. So if price hits 702, take profits. If price reaches out to 786, if it confirms on 702, add to your position. If it reaches 786, take profits on rejection. If it confirms, add to your trade. So, a lot of times that's how these algorithms will work out on certain stocks and, in these types of rallies. So really no way to know until you clear these levels whether or not you have a confirmed bull market or bear market. The interesting thing is VIX was down today, even though the market reversed at the end, reaching back down to some of these lower levels we haven't seen since back in 2020. So are we going to have a volatility event going in the next couple of weeks where the VIX spikes and the markets sell off? Keep an eye on that range. The dollar kind of hanging out, major reversal on the dollar lately. Have a support coming up here at that's the Dixie here, support coming up here in that $100 range plus or minus. So we'll see what happens there with the dollar. If it reaches that level and finds support, then we could be looking for, a bounce again, especially if markets continue into a new bull market kind of a range. Then you can expect the dollar or a bear market sell-off, and you can expect the dollar to kind of continue back up towards these previous highs. The 2-year catching a little bit of a bounce today, 10-year catching a little bit of a bounce after the Fed paused this week and said that 2 more hikes are coming. But again, the market narrative, what the market is thinking, is that the Fed is done. There's a lot of commentary, a lot of economists and analysts are saying the Fed's done, that there's no way they're going to hike anymore. And, job market is still strong, economy is still kind of hanging in there. So they're expecting, obviously, things to weaken a little bit to, for the unemployment rate to rise a little bit, increasing claims to continue to rise. That will continue to give the Fed ammunition to pause. But basically, Jerome Powell came out, greenlit the markets and said, have fun, keep on taking risk. The markets do not believe the Fed is going to be able to raise rates in the next 2 meetings. Ethereum catching a little bit of bounce, and some of the altcoins kind of catching a little bit of bounce. Nothing really major going on. But if we look at, no major bounces, no major reversals, just a little bit of, price action here and there based on that news that we saw with Blackrock. So here's the total too, kind of hanging out. What I've been talking about lately on a couple of Twitter spaces that I'm watching with the altcoins is right now they're only down about, to the low 74%. Altcoins typically revert about 90-95% to the mean. The total too, which is everything but Bitcoin, that does include Ethereum, is down 75%. To revert to the mean, to be down 90%, it can still drop around 50-60% from here. Same thing on total 3. So your risk reward trade is, if you're looking at a market that's currently down to the low 74%, currently only down 73. If you're looking at 90%, then you're talking about this level back in here before the run up of 2020, after March 2020, that big run up, reverting back to the mean would be at these levels here. And that would be around 100 billion market cap, 90 to 100 billion. So that would still, again, be basically another 60-70% from here, which sounds funny, but that would be 90% down, which is what happens typically in a bear market cycle. If you look at 2018, 2019, the low was down 92%. This is the total 3, does not include Ethereum. Of course, there wasn't as many coins back then, but let's go 92%. Again, put you down at 89 billion. So again, that's another 60-70% down from here that the altcoins could potentially see if history repeats like we've seen in the past. So that's kind of what I've been watching for altcoins. Again, everything could play out with the SEC if these issues get settled with Binance and Coinbase, and the market can find some confidence and find some support. It could continue to consolidate in an accumulation range like we've been in since the bottom in October. And some of these levels, especially with Bitcoin. But, as far as the SEC goes, going after Binance, going after Coinbase, at the end of the day, these are allegations. Anybody can sue anybody. They can make all the allegations they want. At the end of the day, it's going to be up to the judge to rule. And then really, for any kind of an interpretation of, what is a security, what isn't, from a legislative standpoint, that's up to Congress to kind of make those changes and adjustments. So this will be an interesting process, and it could be a very good process for the crypto market overall, to bring some clarity, bring some guidance, get some rules and regulations and determinations of what is, what isn't a security. And then with BlackRock coming through with their ETF trust application in terms of what they're doing, if the SEC approves that, then that would be huge for the space as well, and bring a lot more institutional capital in, which obviously should help for price increases. So these are the things that I'm looking at. I'll see you in the next video.